Is diversification dead? I won't blame you if you were an American and asking this question. Take the American situation in 2022. It was a terrible year. I think the S&P fell 19%, the Nasdaq fell 33%, and you could not hide yourself in the bonds, which fell 12%. The tech boom of 2021 was followed by a 30, 40, 50% fall, and Facebook's parent Meta fell by huge one of 64%, right? 64% fall, and these were the poster boys of 2021. So if you had asked me in hindsight, I would have had a lot of regret in 2021 that I did not own Tesla, which had just finished a 10-year run of 4,000% return. 4,000%, yes, that's what it was. And I would have said, oh my God, you should put all your money in Tesla, right? Would I have said that? I don't know, but I'm just saying, comparing Tesla to a dull and boring S&P or comparing any Indian stock to an index is very difficult, because I can tell you Bank of Baroda did 100% in a year when the index did 4%, right? So wow, so is Bank of Baroda the best buy? Or like I said, is diversification dead? Should all your money be put only into PSU bank stocks and you have no other stocks, you have no other debt products, right? That's what it looks like. You should have done, you could have done, you may have done. The question is, would you have done? The answer is no, I wouldn't have done. And when I pick up Tesla as 4,000% 10-year return, I also have to tell you that in 2022 it lost approximately 65%, right? So this can also happen. The gyrations which happen in stock prices is something to be seen, felt, to be, and experienced, to be believed. Otherwise people won't believe. In 2021, and if I had said sell off all your Tesla, you're sitting on fantastic gains, and next year will be bad, you would have laughed at me saying, actually I'm going to buy more. That's what happens. You try to buy more and more of what you have. Why am I giving this example of Tesla? Because the SEC does not watch me, and I don't want to give any Indian example, but I have given you an Indian example. PSU Bank ETF to 81% return. Is 81% return going to be done again? I don't know. So therefore we have a diversified portfolio. We have a portfolio where we have banks, we have coal companies, we have power companies, we have all that, and that is what the index looks like, right? So then you decide whether you are a value investor or a growth investor. But to think, none of us know what asset class, and in that asset class what is going to perform well next year. Could it be floating rate funds? Could it be technology stocks? Could it be pharma stocks? We don't know, and therefore we create a diversified portfolio. We create a portfolio where we have a little bit of everything, like an index or like a portfolio of a good fund manager, and we have debt also, debt as a standby or debt as a place where to keep our money, so that in case there is a fall in equity, to come back and buy. So for that also you need to have debt kept in one place, right? And debt also could perform well, because interest rates go up, then when interest rates go up, after that the yield that you start getting on debt funds is going to be very high. So if the government of India is now going to pay, let's say, 8% on a gilt bond, it would be a great time to be locking in at those prices, because inflation in India is nowhere near what it is in the US. So some of these strategies you will need, but at every stage, sometimes you look at your portfolio rather, and you look at some share which has performed very well, you wish that you had sold everything else and bought that. But the year after that it could be very different, something else could be performing, right? So next year it won't be PSU bank stocks, it may not be PSU stocks, it may be maybe healthcare, maybe IT, maybe banking, or you feel, oh, banking has already done its bit, right? So since we can't predict what is going to happen in the next 1 year, 2 year, 3 years, we create a portfolio which has debt, equity, everything, and we hope that we got the combination right. I mean, one multi-asset fund where I have invested did very well last year, and it was because of gold. So all the gold in my portfolio has also done well. It doesn't mean anything. It doesn't mean that I will sell off all my equity and buy gold. It doesn't mean I'll sell off all my equity and buy PSU bank stocks. In fact, I'm sure I won't do that. So that is why there is a diversification, and therefore we do asset allocation and it works. For me, there is not much of asset allocation. Most of my assets are in equity. But for somebody who does not understand equity as well and who is worried about the fluctuations, they should have a better diversified portfolio than what I have. Thank you. What could be your learnings as an investor? And this is applicable more to Americans than to Indians, because our economy, honest to God, got handled much better than the American economy. So the Fed kept saying that inflation is temporary and inflation will go away, but it was created by bottlenecks in China and etc. Right? They loved blaming the whole world for what inflation they had, and they said it is temporary, nothing will happen. Well, it happened, and the inflation is not coming down. So whether it is caused by gas, whether it is caused by housing, right? Housing has got very expensive in US because people are not used to paying so much of interest for their housing loans. So they all had taken housing loans at very low rates, at 0%, 1%, 0.001%, right? At all those ridiculously low rates. And obviously the human mind prepares you saying, oh, 1980 to 2000 nothing has happened. 40 years interest rates have not gone up, therefore interest rates will not go up. The past is not looking like the future now, right? The past looked great in 1982 or something to 2021, right? 2021, 22 perhaps, where interest rates had never gone up. Now suddenly the American population realized that inflation can be up. Interest rates can go up very fast, right? So the Fed is now paying 4.5% on its 10-year bonds from 0.1% and 1% or less to 4% is a 400% increase over less than a year or maybe 15 months. So inflation can be high, leading to higher interest rates, which leads to higher mortgage rates. So your 1% to 4% jump is a 300% jump. When your interest rates go up so fast and your EMI goes up so fast, very unlikely that all of them are prepared for it, right? So all these things have happened in the American economy now in the year 2022. Also, your asset allocation stroke diversification didn't help, because you saw a 19% fall in the S&P, 33% fall in the Nasdaq, and a 12% fall in the bond portfolio. So you're rethinking, will diversification work, will it not work, will inflation continue to be high? So all your decision making today is based on the immediate past, saying, oh, inflation is going to be very high, I need to provide for it. True, not true, we don't know. Only time will tell us. When will America be able to cut down, bring down its inflation and control it? We don't know. Luckily in India, we did not have a bad year. The Sensex went up by 4%. But if you were lucky to be, if you were in some PSU stocks or in funds where the fund managers were bullish about PSU stocks, you would have made more than 4%. So that was one good thing. Then the Americans, or at least the higher end Americans, keep talking about the recession which is going to be there. Right now, I can't see the recession, but I can see all indicators. Unemployment is high, interest rate is high, not enough jobs are being created, right? So people may not want to work. People have got used to sitting at home and working. They may not come back to the office. So what is it for the, what is likely to happen? Well, they will overcome all that. America doesn't have to worry. They've got something called the dollar, which the whole world uses as a reserve currency. So it's nothing to worry about the American economy. But what strategy should you use? Should you invest in America? Should you invest abroad? I think the American markets have got very interesting, with a 64% fall in the metaverse and a 33% fall in Nasdaq and a 20% fall in the S&P. It can't be now still be unattractive. I'm sure there are enough attractive pockets for you to invest. Should you be investing in American debt? I don't know, but I have invested in one fund which invests in American debt, and that has done well, surprisingly, because it's an SIP, and I'm getting a positive return, and which is good, because if the dollar were to strengthen, I'd get better returns. If the dollar were to weaken, I'd get poorer returns. That they both go together, right? Housing in US is getting very, very difficult, so we do not know what will happen. A recession may not happen in the economy, but a housing very likely to happen. What is happening in Bombay? Some pockets rents are going up, but don't take that as a great indicator that something great is happening in the economy. It doesn't mean anything. Certain pockets, there's a lot of redevelopment happening. So if you take a small suburb like say Santa Cruz, there's a lot of redevelopment happening. So therefore, there's going to be a lot of demand for rental housing, because people don't like to leave the location where they are. So people will, if my house is being reconstructed in Santa Cruz, will I go and live in a far away suburb, say 40 kilometers away? There's another suburb called Mira Road. Will I shift? Their answer is very unlikely. So pockets of Bombay where a lot of redevelopment is happening, the rents are going up. Rents are going up to very specific reason. Don't think of it as a great phenomena. In some parts of western Bombay, which is the western suburbs of Mumbai, prices are going up. In some parts of eastern Mumbai also, eastern suburbs also, rents are going up. Again, the reason is same. So you will find rents are going up in say Chembur, but not going up much in Ghatkopar, which does not have too much of old buildings to be reconstructed. Who is Sam Bankman-Fried? He is the new Madoff, or whatever you want to call him. He's the guy who's lost a lot of money. Yes, of course, he will be prosecuted. A lot of venture capitalists who do a lot of due diligence have all lost money. So cryptocurrency will continue, scams will continue, frauds will continue, people will try to skim you off of your money. All those things will continue in the new year. But so 2022 was, all this was a learning that interest rates can go up, taxes can go up, markets can do badly, debt and equity both can do badly in the same year. You could lose money in crypto, you could make money in crypto, all these things. So whatever you have learned, how are you going to implement? That's also a question that you have to answer for yourself. Thank you.